I'm Kelsey Roberts, and I'm making these videos because I believe that America will be in better financial shape when more American households are in better financial shape. And I also believe that a lot of people who aren't in good financial shape just don't know how to thrive financially. And I believe if you work hard for your money, then you deserve to thrive financially. I also believe that this information should be free and easily accessible. So in the last video, I really got into some complex stuff. Try to make as much sense of it as I can. Um, and I really don't want to revisit that so much as to kind of throw out a game plan, because really up until this video I've been talking about pure math, really just numbers on paper and not really any kind of behavioral change. And I don't want to get into telling people what to do with their money. I really don't like to do that. Like I said, in the first video, I am not a financial counselor. I have no certifications. And for those of you who are wondering, I am in the military. I'm not a bean counter. I'm not a comptroller. I'm not a personnelist. I'm actually a maintainer. I turn wrenches. So if I can do this, I think anybody can do this. But I do want to talk about one simple behavioral change, and a term that I used in the last video when I said subsidizing your retirement. The government subsidizes your retirement. And that would kind of imply that the government is actually putting money into your retirement, when it actually the money's putting money back into your hands. We said we get this tax credits, and we moved our TSP contribution, traditional contribution, up to 8% to get taxes owed at or below zero for the year. And remember, I mentioned it's not on here because it's actually a huge calculation to figure out how much earned income credit will be, but it's going to be about $1,500 for this guy. So this guy's got about $1,540 coming back, and you could go on the IRS withholding calculator and figure out precisely what you look at to get back. But the behavioral change that I want to talk about is just a simple thing. Most of us in the low to mid enlisted ranks in the military get some kind, especially those of us that are married, get some kind of tax refund at the end of the year. What I submit that you do with that tax fund is take it. Okay, and this is not something I can put in this Excel spreadsheet. It's a behavior, so I'm just going to walk you through it. You take that tax refund and you stick it in a savings account, right? And the next month, what you do, and let's say, for example, this is Snuffy, and he's getting, $1,500 back. Because I know some of you are thinking, where's this money going to come from? If I'm putting it into this, I'm putting it into this, how am I going to put gas in the car? Where's this money going to come from? Take that $1,500, take that, whatever you get back. Once you get this below zero, whatever you get back is free money. It's not money that you earned and overpaid. It's free money. I hear people talk about, and I've talked about, people who take money from the government. It's a handout. It's a handout. You didn't contribute to that, and you're getting back what you overpaid. That's free money. And I'm telling you, the behavioral change I'm suggesting is take that free money, stick it in a bank account, and the next month figure out what percentage of your pay that much money is, and contribute that percentage of your pay straight into the traditional TSP, and pay that TSP up, so that the next month, if assume his numbers look similar, instead of having to contribute out of his pay for this year $2,600 to get this for the next year, to get this to zero or less, he would only have to contribute about $1,000. So if he had this money already, instead of putting $2,600 in his traditional and $1,600 in his Roth, he could put $1,000 in his traditional, add his tax refund from the previous year. Okay, and I said put it in a savings account. Increase just for 1 month. Increase your TSP payments to whatever percentage it would take to cover this entire amount, and then just take the money out of your savings account and pay yourself that money like DFAS would at a paycheck. Use that money to buy groceries and gas, and then put your paycheck money into your TSP. It's just moving money around from one ledger to the other. So that's one behavioral change that I do recommend. And another behavioral change that I just kind of want to hit on since I'm talking about that, and it fits with the subject, is something I mentioned before, is defaulting to save. And that's what people do. I've talked to people about, I asked, why would you intentionally pay too much in taxes every month in order to get a tax refund back at the end of the year when you're not earning interest on that money? You're giving the government your money to use for whatever the government wants, and then you're going to fill out a whole bunch of paperwork and go through a whole bunch of trouble just to get that money back without interest. And the concept is defaulting to save, and it's a good concept. It's a good idea. The problem with that is the problem with that method of defaulting to save is that you're defaulting, January, February, March, all the way through December. That money is not showing up in your bank account, and that's good, because some people don't default to save, and they just say, well, this is how much I get paid every month, and what I'm going to do is on the last day of the month before I get my next paycheck, I'll just put whatever's left in the savings. Well, if you keep doing that, the longer you do that, the less you'll have at the end of the month, because you're going to spend what you earn. Your lifestyle, it's weird how it works, but your lifestyle swells. Your quality of life, the perceived need for things is going to swell to fill the amount of money that you can spend on that. So the way to save is to default to save. Right? I'm saving before I even see the money. And that's what this method is. It's getting your money back with no interest, but you still don't see that money. And it's kind of a way to self-discipline. A more constructive way to do that, because the downfall is when you do that, you're socking money away all the way through December and maybe even January or February until you do your tax return. But then when you do your tax return, when you file your taxes and you get your tax return, you e-file and get it in a direct deposit to your bank account, or whatever, however you do it, when that money shows up, it's payday. And it's getting spent, and people plan on this. People plan on spending that money. I gotta buy tires for the car, or whatever. What I'm saying to do is, you plan on spending that money on whatever you need to spend that money on, but instead of giving it to the government, who's not going to give you anything in return for using your money, give it to yourself. Set up an allotment. Allotments come out of military pay. After tax, and you never see that money. It goes straight to where you say send it to. So you can set up. I actually have set up a savings account at a bank that I don't use. I use USAA. It's a great online bank. I highly recommend it. If they're going to pay me for a plug, then yay. But that's who I use. And I have a bank locally that I don't use. I don't go there. I don't walk in the door. I don't use the website. But I started a savings account at that bank, and I set up a monthly allotment at that bank to put money into, to default to save, that I'll never see. I don't get that money back at the end of the year in a lump sum, and it's sitting there in my bank account saying spend me, spend me. It's being saved and it's being not touched. So that's a couple of behavioral changes that I'd like to suggest. And it's your money. You do with it what you want, and you're ultimately liable for what you do with your money, and I'm ultimately liable for what I do with mine. So thanks for putting up with my opinion there, and I appreciate you watching my videos. I'm going to try to put together a lot more good ones. Thanks for watching. See you in the next video.